Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. For a country to participate actively in global markets, particularly in Forex, it needs to have a transparent and internationally recognizable exchange rate. This means that the value of its currency relative to others should be clear and accessible. Transparency in exchange rate is critical because it builds trust with investors, trading partners, and other nations. When a country's exchange rate is exposed, or open to the market, it means that the value of the currency is determined by supply and demand factors on the global market, rather than being artificially controlled. This shift toward exposure is particularly important for countries that previously had fixed or heavily regulated currency values. By allowing their currency to trade freely on Forex, they signal a willingness to integrate with the global economy. This has numerous benefits, such as attracting foreign investments, promoting tourism, and facilitating trade, as businesses and investors prefer dealing in currencies with transparent and stable values. Forex is the largest and most liquid market in the world, where currencies are bought and sold. When a country lists its currency on Forex, it gains access to a much larger base of investors and traders. This access can lead to increased liquidity, which is beneficial for maintaining a stable currency. A currency that trades on Forex becomes more responsive to global economic conditions, allowing for more accurate valuation based on real-world economic factors. This, in turn, can help the currency avoid drastic swings and provide a more stable environment for businesses and consumers alike. Exposure to Forex also enables a country to more easily fulfill international financial obligations. When a currency is traded globally, it is easy to use that currency in international transactions, making it more practical for governments and companies to pay off debts, purchase goods, and engage in contracts denominated in foreign currencies. For countries with significant financial obligations, having their currency listed and traded on Forex can be a game changer. It reduces the risk associated with currency conversion, as there is a clearer pathway for converting their currency into others as needed. This streamlines the process of making payments and fulfilling obligations, both domestically and internationally. Additionally, this exposure opens doors for economic growth and international cooperation. When other countries and companies see a currency on Forex, it is a sign of that country's commitment to economic stability and growth. This can lead to partnerships, trade agreements, and other forms of cooperation that benefit both the country and its global partners. Transparency in exchange rates can also lead to better diplomatic relations, as it signals a move away from isolationist policies and toward open market policies. For investors, a currency that is actively traded on Forex represents an opportunity. Investors are always looking for emerging markets and new assets that offer the potential for growth. When a country's currency becomes more accessible through Forex, it can attract a new class of investors who see potential in the country's economic trajectory. These investors might be more willing to invest in the country's infrastructure, businesses, and other assets, as the transparent exchange rate reduces the perceived risk. Furthermore, exposing the exchange rate to global markets forces a country to adhere to international standards and expectations. There is greater accountability and pressure to maintain economic stability and implement sound fiscal policies. If a country fails to do so, its currency will likely suffer on forex, leading to potential devaluation and loss of investor confidence. This accountability can drive positive changes within the country's financial system and governance, benefiting both citizens and global partners. For the country in question, exposing its exchange rate may be part of a larger economic reform plan. Often, nations take this step as part of a broader strategy to stabilize their economy, control inflation, and foster a more attractive investment environment. By aligning with international standards, they can boost confidence in their economic outlook. This process can be challenging, as it may require structural adjustments and policy reforms, but the long-term benefits often outweigh these initial difficulties. In conclusion, exposing a currency's exchange rate and joining forex can transform a country's economic landscape. It makes the currency more accessible, builds trust with global partners, and facilitates the fulfillment of financial obligations. This transparency fosters economic stability, increases investor confidence, and opens the door for growth and international cooperation. Countries that take this step often find that it serves as a foundation for sustainable development, benefiting their citizens and strengthening their position in the global economy. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.